The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be following Steve Rhodes' 2 hours, great technical analysis right here at TFNN, 9 o'clock till 11 o'clock Eastern Time. Today being Thursday, Larry Pesavento would normally be here. Larry's away. I'll be doing the show at noon, so that's 2 hours coming up. Then we have, Thursday. Oh, then we've got Daryl Martin. We've got Dave White. We've got Andy Hecht. And at 4 o'clock till 5, I'll be back on doing the Tom O'Brien Show. 5 o'clock till 6, Andy Hecht will be doing it. So, looking forward to a really fun day coming up here of technical analysis. It's almost like one of my Master Trader series. Well, no, those usually go for 8 hours. Well, let's hit it. We've got the Dow, which was up about 65. Let me tell you right now what the high was in the Dow. The Dow went up all the way to 15,557, just above the 200-period exponential moving average. But that technique I've been talking about with that faster moving average above the slower moving average that was hinting that there'd be very limited upside as long as that continued, did its job. The MACD expanding now with the beta. Look at this chart. If you're looking at Tiger TV, actually, let me just do this. Certainly want to be able to look at it so I can see the charts just like you can see the charts in Tiger TV. Yep, there it is. Click, we're on. So, yeah, there it is. So this particular chart here, this is what I show my subscribers every day. It's called the opening call. You get 6, 8, 7, maybe 8 or 9 even charts a day, but you don't need that. I would just go for the two most important ones. The Dow chart, which has the Chapman wave analysis, what to look for if I'm wrong, what to look for if I'm right, why we're doing it, what we're doing it, why we went short right there. It even says short right there. And based on the Chapman wave methodology, and here's a little pattern I put in there to say that if I was wrong and 15,400 was not breached, that is, it didn't break to the downside, there was just a possibility that we could have this pattern called the stork leg, Chapman wave stork leg formation. I don't think it's going to happen. I must say I'm kind of negative on this. As I said to subscribers, we don't know the tide is changing until a number of factors happen. First of all, you have to get the sell signal. They're going to a sell mode in the Chapman wave. We've only got a sell signal. We haven't yet, although I put the down arrow at peak F, I have to wait for the day to finish. I have to wait for the 15,400 level to be taken out before I can actually say we are now in a sell mode. Sell mode implies time and price to the downside in the daily. That's not the weekly. Weekly is something complete. I have to wait until Friday tomorrow at 4 o'clock before I can judge what the weekly chart is doing. Always go step by step. The other thing that's really important about this particular pattern is that we had 4 indicators say, be careful. One of the reasons why we went short right there is that it was a peak D. We were starting to see a little bit of a divergence between the stochastic and the MACD, but it was just a starter position. And based on the channel line that I was looking at from earlier on, that's the channel line right there, plus the inside track channel, we were getting to a point of tremendous resistance. And it even hit that at 15,604 at peak E. Pulled back 200 points, and then it had that run up above the 9-period moving average, even as that fast-moving average right there, that gray line, I think you can see it, I'm pointing to it, you can just barely see it, was saying, this is probably a limited upside move. Well, it went a little higher than I thought. It didn't really matter because it hit that trend line once again, that red line. That's the inside track resistance line. I'm going to spend a little bit of time on this stuff because I want you to, and in Larry's show, I'm going to do it in the commodities. It's called the Commodities Hour, and I hope to be able to do that in many of the commodities, as well as the currencies. Most importantly, what I was looking at is that all of a sudden that maroon doesn't look maroon. Yeah, it's the maroon line, that thick line right there, which is the 9-period exponential moving average, which is one of the technical tools that I teach and I use a lot. A lot of people are starting to use it. A lot of people, in fact, are starting to use it now. Said that as long as it will support, that's fine. The moment, and I'd said if it goes 3 out of 4 sessions, especially consecutive sessions, closing below the 9-period exponential moving average, especially if that little gray line was above it, that would be a negative. So we've got a peak F-top in the Chapman wave. What is a peak F-top? It's the 6th highest peak. It's where you've got to be careful. And if the plethora of indexes are giving you the same signals, if there is one that is still failing to make the new high, it could be dragged lower by all the others. So now, here we go. That's number 1, peak F. Number 2, closing under the 9-period exponential moving average after a peak F. Number 3, the beta. Now, I'm probably not the one to really talk about this. Dave White is the expert in all these technical considerations when it comes to the mathematical formulas. But the beta, the distance between that red line, the slow-moving average, and the fast-moving average, the green line, in the MACD, the moving average convergence divergence, tells me that there is momentum to the downside. Look at the momentum to the upside here when it crossed positive. Look at that momentum. It took the price of the Dow all the way from the 15,100s to the high of right there when it started to turn down to the high in the 15,500s. Okay. So that's number 3. Number 4 is that the stochastic went under 80%, turned down very sharply, still looks very poor, and is now trading at 51%. There's another one I'm going to include just for now. It's all part of the MACD, so I'm not going to include it as another technical indicator because I don't really use it very much. It's just a confirming one. Is that the histogram, those little red lines underneath what's called the 0% line in the MACD? A lot of people use that. I consider such a late entry, such a delayed response, a lagging indicator, that I hardly ever use it. I just use it as a confirmation. It says that this is the 3rd session in a row that has started to expand to the downside, and you got to be careful. Why have I not gone? I've got the down arrow. Why haven't I called it a sell mode? I cannot call it a sell mode because there were conflicting techniques here. And the one technique that is really important is that even now I would say that this is negating any chance of a stalk leg to the upside. But I'm very conservative when it comes to these things. I want to. It doesn't even have to close. It has to go underneath 50,405. That just negates this pattern altogether. The pattern that's a possible stalk leg formation. Here are a couple of other things. I'm taking time, if you don't mind. It's almost like a lesson in the Chapman wave methodology. I think it's worth it. I want to discuss things as they occur, why I look at them, what I look at, why I've done this for so long, and why, to me, it's just fun all the time. And when it stops being fun, I've had 4 careers. It wouldn't bother me to change to a 5th career. Nothing. I always start things fresh, as if from scratch. I became an artist without ever having drawn before. Became a musician without having played an instrument before. Professional musician for over 20 years in the Boston area. Conducted, composed, arranged, performed as a clarinetist and bass clarinetist with different orchestras, etc. So, and then I simultaneously I was a technical analyst. I had traded stocks years ago when I was a teenager with my father, but I'd never really done any technical analysis until I read Granville's book, and I started studying technical analysis back in the 70s. So now look at the the VIX, the volatility index. That volatility index is that's really quite positive. And that's the reason why that the rally that we saw this morning is just, this is something that is an anomaly, but I don't mind it being an anomaly, and I'll explain why. Because what it's saying is that there's still some internal strength, That's another reason why I didn't go to a sell mode so quickly. And until the VIX index starts to decisively trade up in the 15s and hold in the 15s, which gives it plenty of room. That means the Dow could go down a lot further before that happens. At the same time, I've got to be aware that the pattern really hasn't broken. The S&P is not even close to the 1676 low. It went to 1684 the other day. That's 1676 low back on the 26th of July. That has to, as far as I'm concerned, that has to be taken out before I get my weekly chart will signal sell signal to sell mode. I'm pretty sure it'll be almost in one swoon if that happens. So, okay. And the trend is still ignoring everything at 0.91 where we've had such a sharp pullback. It's just saying ho-hum. So that's what we've got to look at. Let me just run the numbers for you. Here we go. The Dow is down 33 at 15,437. The S&P is down 0.23 at 1690. These divergences have been occurring for some time now. The comp index is up 7 at 3661. I'm just going to jump over, if you don't mind, to the cyclical index. That's a $CYC made a peak F top in the daily. Technicals are failing. Weekly is still at 93% in the stochastic, and the MACD is making lower highs, which is a hint that it's losing momentum, but it hasn't given the signal. There is a potential here for a peak F/B occurring by tomorrow at 4 o'clock. But my big interest here is in the Morgan Stanley Cyclical Index, leg D with a doji candle, with a stochastic at 89% and the MACD still strong in the monthly chart. It's made peak Ds before, very often in fact, and each time there's been a pretty good sell-off. And there was a peak C1, C2 at the last one back in March of 2005, very mild pullback, went to a low, and then started a brand new ABCD to the top in 2007 in July. A little bit of a slump all the way from 1132 down to, I think it was 280 or something, 277 in March of 2009, and then ran up to a peak D in May of last year, 2 years ago at 1140, pulls back to the supporting, what became a supporting level just above the 200 period exponential moving average at 718, and now it's gone to a high of this month 1294, and it is making a potential doji candle. I'm going to be watching this real closely, because if the cyclical index makes a new recovery high in this month, August, that's going to be a positive. I cannot ignore that. If it starts to break down and it goes underneath 12, let's call it 12, let me just double check, 38, 1243. Yeah, if it goes underneath 1238, and right now it's at 1268, that's 50 points away. Doesn't sound like much, but it's a big index. If it starts to pull back underneath that level, then I've got to determine that that's going to be taking some time to consolidate. So, I've gone through a bunch of things. I'm just going to tell you that gold has had a fabulous move. It is up right now. It's up 21 to 1306. I'm going to cover gold. One of the reasons why we went back into the equivalent of the GLD. I'll be back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, I'm going to continue with all the different indexes, talking about gold. I just had a quick question. It's up in the Den asks, folks, the Den is just a fabulous medium. You can check it out. You can see the charts as we're doing them actually through the breaks and everything. That's really interesting because we start to do work either for the next segment or questions that were asked. Sometimes I answer the question during the break because I won't have time during the actual show itself. I'm running out of time. But FOXA, F-O-X-A, 21st Century Fox Inc. I'm looking at the volumes. Yeah, heavy volume. The question is FOXA breaking out? I'm looking to start a position. I'm going to make the suggestion here because there is a chance in the weekly chart, that pattern that I call the falling axe, it's really extended, but that's not to say that it couldn't go up a little further. If you treated this, let me just do this quickly, A, B, C, D, E, slightly higher, F, all right? A, B, C, D, E, pulls back, A, Chapman wave, A, B, C, D, E, and it pulls back. This is an A. There is a chance that if it breaks over, it's at 32.47, up 65 cents. If it goes over 33.05, regardless of what the market is doing right now, 33.05, it'll retest the 34.04 high. If it breaks above that, that's going to be very interesting, because all you need to do if you grab a position right now is have a trading stop. Make it a small position. Why? Because it's very extended as it is. That's not to say it can't go higher, but I'm saying this is where the risk reward is a little more, is greater. To start a little position at 32.49, have a stop. I would say because it's a small position, you can have an 80-cent stop. I personally would have a stop around about 32.06 to 32 to 32. Right here, 32.50, it keeps moving at 32.50. And the reason being, the moment it breaks 32.89, you can make your stop on this one almost, not your entry price, but maybe 10 cents lower. Why? Because this move should extend it very quickly to tackle the high of 33.05. Very nice. Just a quick trade, nice percentage risk reward, 50 cents stop, whereas you can make $1.50. That's the way I'd look at it. Things can change during the day, especially today. This to me, I said to the subscribers, this is going to be one of them. I think it could be one of the very important sessions that we have, and so far it's proven to be the case. ABCD. Yep, it's the same thing as the daily in the 120-minute chart, but there the technicals are, the MACD is very strong. Stochastic still has a long way to go. I'm not sure why. So anyway, that's yes. So the answer is yes, as a trade, only as a trade, small position. Don't have to be a hero here, but the risk reward is there. And if you're a full-time trader, that's exactly what you want. You want to have accumulated nice gains. Nothing, no, don't have to knock it out the park. You just want to keep doing the same thing over and over. Now, okay, so I just quickly did that. I get another question in the den about the dollar. That's exactly where I wanted to go to. The dollar has an Eiffel Tower pattern. I've spoken about this for a while. And what I'd said is that the 200-period exponential moving average at 81.84. Now, if you know anything about the Chapman wave, you know that we always want to go from a buy signal, the most obvious low bar, that's the easy way to do it, to at least a D or an E. If you get to a D, yes, it can go a little higher, but you have to assess other things. In this case, the dollar, back on, I'm going to do this in much greater detail in Larry's show. It's more appropriate. But it went to a D on the 17th of May, and then when it went to E at 84.50 on the 23rd of May, plop. The technicals were fading, and what it did, it went all the way down to trough E at 80.50 for a double bottom low. And I count those now. In my CD Introducing the Chapman Wave Methodology, I usually say that you probably have to think of it as a failure. Now I don't. I say as long as it holds to the penny, it can't break by 1 penny, treat it as a peak. You want to be getting your top in the letters of the Chapman Wave as quickly as possible. So what happens? It goes there. It's got a peak A, B, C, D at 84.75 on July the 9th. And then it plunges down, trough A, B, C, D. Now look at this. I often get asked about the symmetry aspect. How do I do that? Well, sometimes it is perfect. It is called the plumb line. But at other times, when you can actually see that visually it's not, I go to the next candle of greatest importance. In this case, I'm going to go to the low of the 11th of July. I'm going to change the color here, green. Change the color here. I'll make a new parallel and change that to red. And you'll see that this comes in to today. Well, it's missing it so far. But if that misses, all I'm saying is that there's very often a price, left side, right side price time match. That's very important. Then I put in the diagonal, Chapman Wave diagonal, that is called the inside wedge. And that's giving me the target for the dollar. And that says 80. It's at 80.93. There's a good chance it's going to come close to testing 80.50. And then it could bounce. But I've been talking about the euro. Are you going to leg D in the Chapman Wave? Today it went to leg D. I'll be right back. Basil Chapman, Tiger Technicians. I'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Let me just continue finishing this, and then in Larry's show, we'll do much more in the commodities. It is the futures hour, and we'll do much more in that area. So gold is up 22 at this particular point at 1307 area. There's a channel line that I drew in after the peak D-top made recently. And that channel line was one of the reasons why we wanted to get into the equivalent of the GLD, the gold ETF, at a certain point, which we are in, and it's up really nicely at this point, probably up about 2% from where we got it yesterday. But that's not the issue. The real issue is in the context of what we're looking at, it is the weekly chart that says to me, how are you going to get out of this morass in gold? And I'll talk more about it, but in the meantime, gold needs to do this. It needs to clear, and I'm talking about the continuous contract now, but it's almost the same price as the spot gold. Gold needs to clear the high of 1349.10, whatever the high was on the 26th in your contract. July 26 marks leg B up, and the higher that goes, the greater chance of getting to the 1449 area, 200 period moving average. But in the meantime, back at the ranch, what I'm really looking at is there is a possibility we could form an arch formation and then a larger arch formation, and that's going to be the clue. Is this going to be a straight up move that takes in this pattern that I'm showing right now? I'm going to make it blue so it's nice and strong, which is an up channel, or is it going to start to curve over once again? There's that up channel. That would imply that round about the let's see, the week of the first week of September, Gold is trying to tackle the 1449 area. Let's keep it as simple as that. So you've got silver up. Silver is up, if I can find it here. Silver is up 0.63 at 20.14. High-grade copper is at 3.273. I just want to show it for a moment. HG there. High-grade copper, nice move up. It's actually leg C. Very quick, leg A to B to C. But I like this action. I hope that, in fact, I don't mind being wrong about this, the sell signals that I've got in place. I haven't got the sell mode yet because the S&P is still stronger than the Dow. So I always prefer bull markets because in bull markets, people are having fun. But in bear markets, it's not fun. But that's not the issue. The issue was that copper was failing. It's still a terrible pattern in the weekly chart and the monthly. But most importantly, right now, what we're looking at, and this really is important, is that you've got, at this stage, copper breaking out above all the recent highs. Is going to tackle this candle right here, the candle of the 11th of June, 3.2885 would be the level to watch, and today's high is 3.27 something. So let's go on here. What I wanted to do is I wanted to also mention that in the Qs, the QQQ Trust Series, see, there's still an outstanding D. There's a chance that this, because the MACD and stochastic held way better than the others, when it went from the last peak to the most recent peak much higher at 77.08, that the QQQ Trust Series could in fact see that leg above 77.08 as we're kind of rotating here and rolling. When I say rotating, I'm going to show you something striking in a few minutes. And what we're looking at is the stochastics at 87%. That's good. In the daily, the weekly is 94%. That's very good. MACD is good in the weekly. In the daily, it's just making the H to an M pattern. So in other words, it's this right shoulder pattern that I'm watching real closely. Doesn't say it can't go. It's only 76.76. Hey, all it needs is 30 cents. No, 33 cents. 33 cents. 0.44, 0.45%. And it's over. And you get your leg D. And then everybody's in sync. So I needed to go through that. And let me show you something else. One of the most amazing stocks on the stock market has been AZO. This is AutoZone Corporation Inc. It is, in fact, a car and truck parts company. Look at the way it's walked the 9-period moving average. Since it broke above it in December of 2000, I'll say this real clearly. In 2009, January, when it broke up, in 2008, January of 2008, it made its low in November of 2008 at 84.66. This is the monthly chart we're looking at. When it broke above in that strong candle of December of 2008, above the black line, the 9-period moving average, in all this time, to this very moment, it is only closed twice. Let me just say that again. So we've got one, so there's 2009, 2010, 2011, 2012, and 7 months of 2013. So that's 48 plus 8, just about 56 months. It is only closed underneath the 9-period exponential moving average twice. Once in October of 2009. Remember, there was a very sharp sell-off, but it only went to under the 9 EMA for a second, then closed right above it the next month. And then again, it went under it, but it never closed under it in August of 2011, but it closed under it decisively in December of 2012. 4 years later, I'm waving my fingers, 4 years later, and it hasn't closed under that since. I think it's about to close under it in the next month or so. Why? I could be wrong, because it's G/C in the monthly, and usually monthlies don't usually go to G, they usually go to at least a D. But there's something here about in the weekly chart that says this is most likely a peak F-top, as the MACD and stochastic, which are fabulous even now, are turning down. And for the first time in since April, the week of April the 19th, AZO, AutoZone, trading at 426.49, down 855, has gone decisively lower so quickly. Now, Here's a technique that I use. There were two candles with slightly lower highs, 452.18 on the 31st of July and the 1st of August, 452.15. That's fine. But that relates to the monthly, and that's a technique that I've developed over the years, and we'll see if it's going to work. And that is two consecutive bars with a fractional difference between the one bar and the following bar. The latest bar is fractionally lower. So I'm watching this really closely. We tried to short it this morning. I mentioned it yesterday as a potential short. It gapped down. We never got it. Today I wanted to short it at 438 something. The high was 437.17. Whereas it went to 424 in in minutes. It went down. It's trading down 8. This is telling me to be somewhat careful, because this is the area in the automobile sector. You know, you read all these reports. People are keeping their cars longer than ever before. 11 years. Some say even longer than that. Well, look at this. It says that companies like General Motors and Ford have been selling cars and selling cars. I'm very cautious now about Ford. We had it as a long. We got stopped out for a profit yesterday. I'm very cautious now. Why? Because it's pulling back with GM. Let me just double check GM. Yep, GM made a peak D, made this H pattern, Chapman wave H pattern, broke the left side low, tried to get back into the arch formation, failed. I'm watching GM. If GM fills the gap and goes below 34.84, yesterday's low was 35.43. If it goes underneath there, the weekly says be careful, timeout unfolding. Monthly is still fabulous, but the weekly says peak E, you just got to be careful here. It means that GE would have to get to it's a 35.83. It's to get to 37.60. But what is it really saying? It says that people are slowly been building towards new cars, because there are deals out there, number one. Number two is, it also says that people are saying, you know what, I've just put enough money into this car. I don't want to put, another $1,500, but there's nothing that you take your car for that isn't a big amount, especially the new cars, but these are the older cars. So you get tired of it after a while, and you say, I may as well just either lease a car and I can pay this amount of money that I'm doing in repairs to for a brand new car, or you say, I'm just going to go for it, I'm going to get a new car. So that might be happening, and I suspect it is happening in AZO. If you look at Auto Parts Company, AAP, this is, whoa, look at that. Made a peak D, Advanced Auto Parts, way back in April of last year at 92.52, plunged down to 60.87, had a rally to peak A and then B, and now it might be arching around because the weekly has just produced that exact same pattern, the failure pattern, the what I call the dreaded H, or the H pattern, lowercase h. Always think lowercase h. There are no H's in the Chapman wave alphabet, A, B, C, D, E, F, G, and then it stops like the piano. You never get an H, but in the patterns, the lowercase h is formidable. And it went all the way to the 200-period moving average today at 79.52. Now it's at a nice bounce at 81.44, but it had a high. What a round number, 83. Boy, these round numbers are just showing up. Let me show you something. Remember Zillow? Round number I spoke about, 94. What a pullback very sharply from 94 to 81. Well, look at this. We've got another one here. Oh, spiking up to new highs. We've seen a new recovery highs. Look at Groupon. Groupon, leg D, spikes to D, leg E in the weekly, A. It's only A in the monthly. So this is, I think there's a rotation going on, and the rotation is going into stocks that had great IPOs and then plummeted, or like Facebook had a great IPO and then nothing happened. It was like a rock in water. It just plummeted down to the bottom, and now it is within a fraction of making 39.32. It just needs 39.33 Facebook, and it goes to leg D. In the daily, it's at 38.94 right now. Huge leg B up. I'm going to call it a B/E. My suspicion is it's a B. So there's a rotation into different types of stocks right now. It is the stocks, the social network type stocks. And we're seeing the older type stocks having a problem. And look, he has a LinkedIn. It's doing fine. I think it could make another peak to 237.97 for leg D, but it is starting to bump into resistance. So a lot of these stocks have had a fabulous move, getting a little tight. TSLA, I promised someone today that I'd look at it and see if I can make a call on it. 157.86 was the high. Spike up to leg E. See those D, E's, and F's on news events, economic news events, or performance news, and I get a little nervous because I think that some of that has to be backing and filling. So Tesla's had to call it spectacular, you can't even say that. So I had to thank, who was it the other day? Fabulous. I love the fact that he sent it to me just almost immediately. I was talking about a stock that I couldn't remember. This client of mine had shorted, and I just, for the life of me, Sandy. Thank you, Sandy. Sandy sent it to me. It was iOmega. I said Omega. It was iOmega. Some of you remember iOmega. And iOmega had the same sort of thing. Just a phenomenal new company, new concept, new everything, and skyrocketed. And then, whew. I don't think that's the case with Tesla. I think Tesla falls in a really important niche. I think it's a niche stock. You've got to treat it. You remember I spoke about it. I wanted it for my subscribers as a sexy stock. I spoke about that months ago as the stock du jour, the one that's going to be talked about at parties and things. And not only that, they just got passed here in Natick. You remember I spoke about the Natick Mall. I sat in a number of times. I sat in a Tesla. And a fantastic car. Really is a fabulous car to sit. Now, to drive, I have no idea. But I haven't spoken to anyone who has one. But now they've got the license. They're waiting for approval. It'll take a week, and they can start selling their cars at the Natick Mall. This is a huge breakthrough. That's number one. And number two, they're going to have dealerships. They've got one in Watertown, and they're going to have one right there in Natick, I believe. So that's important. All right, questions in the den. Was that OW? Are you saying ow? Or is that a stock? Yeah, OWW. Wow. They should have a W in front of it. Oh, Orbitz Worldwide. Why did I forget about Orbitz? Of course. That's it. This is new technology. This is what we're looking at. That's the reason why I can't get overly bearish, but I am looking at some stocks that I think are going to pull back really sharply. And I think the biotechs are in that area. They've just had a spectacular run. So OWW just spiked up huge at all-time highs, I think. It must be all-time highs, surely. No. The IPO was for Orbitz was at high of 15, round number, pulls back to a little bit, just a little bit to $1.10 back in March of 2009. And this is A, B, C, D, brand new A, B, C, leg D, and I suspect it will touch the 15 level. It's at 1248, so that's looking very good. And then we've got Netflix and new technology, new things. Netflix has made a peak D. I think it's just resting. Netflix is tired, needs to take a break. It can go sideways, but if I tell you right now, if Netflix at 253 with a 217.31 and a 264 round number high, the day of the high of the 18th of July, if it breaks underneath 237 at any point this month, it's going to take a well-earned breather, and it's going to do some backing and filling for a while. Starbucks, same thing, new technology in a sense. I'll be back straight after this break.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, I don't remember where we were just a moment again, but I had questions in the den. One was from S&P CF, which is CF Industries Holdings, Inc. It's in leg B, peak B in the daily. It's really working very hard. I haven't finished the weekly. Let me just quickly look at this. Yeah, it's made a potential double bottom, and it did spike up, but it didn't hold. It needs to at 192.59 up 2.71. It needs to break above 197. The moment it and holds, it went there once, but it didn't hold. The moment it does that, there's a real good chance it's going to go above 203.44. That makes it's a 192. The low today is 180. Low yesterday was 184, 185.11. If this closes under 185.11, it's got a problem, and it's going to be retesting the lows, and then it's just stuck in a trading range. Monthly start has made a peak E, and these peaks, Fs and two Fs and an E, going back to 2006. From the beginning of this chart, says that you've got to be a little bit careful here. It's really, the MACD and stochastic are very weak in the, so if this is a trade, all I'm going to say to you is stay in the trade. You want to see it in the next 2 days at least. You want to see it go above 195.22, number one. Number two is, if it pulls back and it goes anywhere in the 189.56 area, make it a tight stop. I wouldn't hang on to this because it's got a pattern that should be a breakout pattern. This channel, I drew it earlier in the LD, I think it was. That channel to the downside, taking this 1, 2, 3, 4, 5, 7, 8, 9, 9, 10, 11 bars like this, should break to the upside and hold. So it's really important. This gets to the 195s. 3.5 points is not a big deal. It should do that, and it should do that pretty soon. So I hope that helps you. The other one was YCS. YCS, that's a railroad or a transportation. What is that? YCS. Oh, YCS. That's not. This the ProShares Ultra Short Yen. Okay, so now let's look at the yen. The yen right now, the YCS, looks to me like the low of 57.60 on the 13th of June. The 58.44 is the 200 period exponential moving average. I spoke about this before when I was looking at the USD JPY. It's the same thing. You see that cup, and I drew it in. I said it looks like an H pattern. I think it's going low, and to me there's a target of 94.50 to 93.50, because 93.91 is a 200 period moving average. And even more importantly, look, I'm going to do more of this in the next hour when I do Larry's show. This is the futures hour. So leg D is really strong in the euro, and my suspicion is it's going to go above 1.34153 for a combined overlapping leg D. Well, let's call it an overlapping D. It has the characteristic of an overlapping D, but let's just call it of a breakout above 1.34153. 1 penny above, well, 1.01 above, and it goes to leg D. If it does that and it holds, then you can start to think of that, of the monthly chart having a chance of 1.37. But I'm only going one step at a time. But I need to just show you. I'll do this in Larry's show. The dollar. You know what? We'll spend time in Larry's show. I'll do much more on the currencies, etc. Because there's some things I want to look at as well. Now, Groupon is part of this whole area of the rotational correction that I always talk about. And that's the reason why you saw the market up very sharply with the futures today. Then suddenly, whoosh, the cover of the hole gets opened up, and the market pulls back. I'll be back for Larry's show, but let me just say very quickly as we're going out, let me just do this because I don't have to worry about not introducing the next person because it's me. Watch the Dow. Anytime in the next day or two, a close below 15,405 would be very negative. Actually, even going under it would be very negative. I'll be right back for the next hour.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.